Hey everybody, this is Jim at FreeChartVideos.com using time-honored techniques to understand modern markets. This video is for educational purposes only. It is not intended to be used as any form of investment advice. I can draw lines on charts, but you need to draw your own conclusions from your own research and make investment decisions that are suitable for your financial situation. I'm not a licensed professional. I'm just a guy that draws lines on charts. Okay, looking at the S&P chart here on a 30-minute chart, meaning each candle is 30 minutes of trading. Another day today, obviously, the sun did rise. Another up day today. The market's up, S&P up about 1.3%. And frankly, the market's surprised me with this strength today. But it surprised me in one way, but it didn't in another. And I'll tell you what I mean by that. First thing, I want to go over a couple things. The first thing is, we had identified what we believed to be an ascending wedge, which has bearish implications once this bottom line breaks. And when that broke, boy did it. So what is the tendency of a wedge again? If you'll recall, the tendency of a wedge is to result in a move that retests the lows that were in place before that wedge formed, and that's basically what we did. Now, additionally, for the past few days, I've mentioned this red line and how I thought if the markets got over that line in convincing fashion, that I would take that as a bullish sign, which today the markets did. Now, that doesn't mean long-term bullish, like the coast is clear or anything like that, because we still got this resistance here, or right around 1260 from the neckline of this not inverted, but the neckline of this head and shoulders top. If you want to take a look at that real quick, I have to go to a 4-hour chart. There she is, left shoulder, head, right shoulder. Breakdown with devastation, bounce. By the way, the bounce was on the neckline of this inverted head and shoulders pattern, which, if you've been following my videos, I mentioned that might be a good spot to look for some support. It briefly got down below it, but most of the selling on the big dips here has been held at that line. Just that one day that briefly got underneath it. Now, I have preliminarily identified what might be a pattern in development, and that is bounded by this line and this line. Now, this is very, very preliminary, but I'm drawing these lines here to see if maybe there is resistance at roughly the 1200 level if we reach that, and also if we come back down, if we find support on this bottom line, which I think is, this bottom line is more legitimate than this top line. And the reason I say that is we have two pretty clear bottoms that the markets have shown we're ready to move up now. We came off this bottom, and now it appears that I'm satisfied with this bounce here as being showing us that this was at least a short-term bottom. The top line is a little more guesswork, because I've only got one point that's legitimate that I know of, and that's right here on the 17th of August. The only other line that I have, the only other data point that I have is this peak right here. So this is a little less trustworthy of a line. Additionally, I want to show you this because I want to make every case that I can for you. If we go back to this pullback here to the neckline and start with a line right there, and across this peak, you can see that today's move just barely peaked above that line. So really, if there's follow through tomorrow, then I think we're probably in pretty darn good shape for at least running up to 1200. If we break 1200, then I think we're in pretty good shape to come back up here and retest this neckline. And it's all happening a little faster than I thought it might. Or we could stay in between these lines for a long time and do it somewhere down the road. But what I'm saying is, this looks like this is probably, if we get a little bit more gains out of the market tomorrow, then I would say that we're looking at a run to roughly 1200. Now, if we look at this on a 3-minute chart, I want to show you some kind of some mixed signals that I was getting today that kind of had me paralyzed throughout much of the day. And the first thing was, I had originally had this line starting on this low and drawn across this bottom right here, and then I had a line that was kind of, these tops are kind of ragged, so I didn't know exactly where to draw the line on the top, so I just made a parallel line. That's not that important. But you see this bottom, and and today, when we started to get underneath this, I was like, okay, here we go. This is gonna, this is gonna fall now. And instead, it just kind of meandered back up. And when I saw that it got over this line right here, which I had drawn temporarily on my chart, when I saw that that line got taken out, I was like, Then I saw that it got back over the green line, and at the same time getting over the red line. Then it stayed above the red line, back tested it a couple times, but still under that existing green line. And then finally, at the end of the day, it closed over that green line as well as over the high that had been set previously in the day. So I kind of was looking at all this, and I said, none of this is making real good sense. And then I started looking at the chart again, and I thought, again, I'm basing this on this low right here as being the start of that channel, and that isn't necessarily the case. So when I readjust this line thusly, anyway, sorry about that, had to take that call. When I adjusted this line to take all of today's bottoms into account, then all of these touches down here in the afternoon, the ones around midday, as well as some of the lows that were in place yesterday. Well, not the lows really, but some of the sell-off, some of the valleys, shall we say. It appears to me that those line up pretty nicely. So what we have here is a case where quite possibly our channel starts with the breakout over this little pattern right here. So if we do that, we have a little bit cleaner bottom line, and I'm comfortable using that line going forward because it kind of explains what happened today. If I go with that old line, nothing makes much sense at all. So if this is the case, then we ended the day kind of mid-channel. This was, I don't know what to call this. This was just some exuberance here that that was met with pretty strong selling pressure. But then the markets recovered, and that to me is, at least for now, a sign of strength. Additionally, there was a very small little head and shoulders pattern that was created during today's action that has not yet made its target. And if it does so, it should be at least the mid 1180s. So that's kind of what I see in the S&P today. And in long range, again, I'm thinking we're we're going to get a move back to test that neckline at 1260. When? I don't know. But eventually, I believe that's going to happen because that is just such a strong tendency for broken necklines to exhibit that once you really get into that downward move, there's a rally that will get cranked up and go back and test that. Now, is it possible that that the markets are going to get up and set some new highs? At least one analyst has made a pretty bold call of 1650 in 2011, which I personally don't think there's no way. I just don't think it's possible. But I don't think that it's necessarily out of the question that eventually we do not make some new highs. As ominous as this is, we still need to be on our toes, and we still need to watch everything. Because if this ends up being good, firm, solid support, and we were to somehow get back over this neckline, it could do that. I am expecting a fight at this level. I think it is a good place to short, but don't let your guard down, because this pattern has already fulfilled its minimum target. That doesn't mean that's all it's going to do either, but it means you can't look at this pattern and say beyond a reasonable doubt that you see more downside in this pattern, in this head and shoulders pattern right here, than what the markets have already gone through. You just can't really make that case. I can make the case that the markets will likely at least go sideways for quite a while, and it is possible that they just get pummeled and head down even further. It's possible that all of this action we're seeing right here, as we see the this possible pattern from here to here, it is not out of the question. Again, we have to watch these lines, but it is not out of the question that we rally back to this, and then we sell back down, rally back, and then finally this thing breaks out through the bottom and heads back down to 1040 or 1020. That's possible. But what I'm saying is, don't be caught flat-footed. At this point in time, all we can do is watch what's happening on an intermediate term and on a short-term basis and try to make a little sense out of it. And I hope we're doing that. Look, thanks for watching. There'll be another video tomorrow, and I've got a good bit of travel coming up in September, but I'm going to try to get these things done from wherever I may be. And the quality probably won't be quite as nice. What I do on my laptop is just not as nice as what I do on the desktop. But anyway, take care. Thanks for watching.